Alrighty. Good morning, everyone. Happy Friday, May 10th, 2024, and welcome to our live trading with Kate session. We have a larger group today, so welcome everyone who's here. So excited for today's session as we recap the volatile market week. We have had some pretty crazy swings in the markets to the upside, to the downside, and now we're moving back up. We want to be able to stay in some of these trade setups longer and really understand how we can take advantage of these long running moves. Now, of course, it's easy to see after the fact. Well, of course, that we have a long move to the upside, would have loved to get in long already and take this move to the upside, and vice versa when we're having big moves down. It's easy, hindsight is 2020 and thinking I would have loved to catch some of these big moves, but being able to anticipate that and see that ahead of time is absolutely invaluable. And I want to kind of continue to bring that into light during today's live trading session. We have the upcoming 3-day event, which starts on Monday, and I'm looking forward to having you all there as we go behind the scenes and really take a deeper dive into finding some of those key turning points in the markets. Just give me one moment, I'm making sure someone's trying to get in the room, so I'm just going to send them the link, and then they should be good to go. Alrighty. All right, so let's jump into our prep screen for today. Take a look at that while I send out this email momentarily. Okay. One more second. If there's anyone else that you know that's trying to get into the room, just feel free to pass along the Zoom link for them. Okay, there we go. That should have worked. Okay, so prep screen is here. Trading tip of the day: to become confident trading in the live markets, traders need to go behind the scenes and identify where the key turning points are most likely to happen. So we need to be able to look at a plain price chart and be able to see what the trend is, understand where the markets are going. Are we in a reversal or are we in a trending market condition? All this needs to happen behind the scenes as we prep for the market open at 9:30 a.m. Eastern time. So again, we need to be able to identify key turning points and where they're most likely to happen. So simplify your trading with some of these step-by-step walkthroughs that I'm going to be going over during next week's 3-day event. Now, a couple students got in on our crude oil trade. This was one that we were keeping an eye on for a couple days as we've been pulling back. We're finally getting that huge move to the upside, and being able to see when this is happening and catch it ahead of time can help you stay in some of these trades longer and catch these longer running moves. But we need to be able to understand, again, what's going on ahead of time so that we can prep for the market open. Let me know if anyone got in on our crude oil trade from our Wednesday session, but it's been working out tremendously. We'll go over that one today, as well as many other trade setups. So equity index grid has been updated. Take note of some of these long trade opportunities. Markets are moving higher. We want to participate in the uptrend. So as the markets start pulling back, I was noticing a little bit of a pullback earlier. We want to look for ways to splice in long to take these moves back to the upside. Spotlight trade for today is going to be copper. This was one we were also talking about on Wednesday. Some of us got in on the short trade. Let me know if anyone took advantage of the long trade based on the daily 2-candle flip. I believe we'll take a look at that one in a second, but some of these moves are just tremendous to the upside. Gold is up 1.3%. Let's see, copper is up 0.82%. Again, seeing what's going on ahead of time and behind the scenes is what can lead you to getting in on these trades before they happen. So copper, we're in a pretty big uptrend. Long trade opportunity on a pullback is going to be 4.5480. Stop at 4.5170. As far as news and economic reports for today, news says U.S. futures rise as rate cut confidence fires up. So we're more bullish on the markets. We're trending to the upside. We need to be taking advantage of the trend in this case and looking for the pullbacks to splice in long, not trying to pick the tops because that's where we're going to be limiting our profit potential and limiting the length of the moves that we're getting. Economic reports and events. There are a couple of Fed chairmen speaking during our session. So 9 a.m. and 10 a.m. Eastern, we'll have Fed chairmen speaking, as well as consumer sentiment report at 10 o'clock Eastern. Remember, you can check all of this by going over to Econoday. Now for me, kind of a little bit of a hack is I look for the ones with the red stars on them. As you'll notice for today, the only ones that we have marked here are ones that have a green diamond on them. Those ones aren't going to be the market moving reports, so there's not going to be as much volatility when those reports come out. Yesterday, however, we did have jobless claims. We saw the markets have a pretty big reaction to that before today's session. We've got Fed chairman speaking, again, 9 and 10 a.m. Eastern, and then consumer sentiment at 10 o'clock Eastern. So that's our morning prep, just to give us a feel for today and kind of going over everything. The markets are pretty bullish. Again, we've been seeing a little bit of a pullback the past couple days, but those pullback moves are what's leading us into these next moves to the upside. So again, we need to be prepared ahead of time, and going behind the scenes will allow you to be able to get in on some of these moves prior to them happening. So I want you to take a note of copper right now. One exercise I like to do with my students is kind of just taking it day by day and asking yourself that when you have a candle, say the end of the day looks like this, and you have a green candle and red candle at the top of a move, then the next day, should we be looking for long trades or should we be looking for short trades? Now, who can tell me that? For those of you who've been around a while, if we have at the top of a move, after a breakout to the upside, we have a 2-candle flip, green candle and then red candle. For the next day, should we be looking for long trades or should we be looking for short trades? There we go. Scott's got it. Julia's got it. Yeah, we should be looking for short trades. So what that does is it sets the parameters for the day and saying, I've got a 2-candle flip at the top of a move. A couple other details here I'll share with you during the 3-day event. But a 2-candle flip at the top of a move, that says the following day, we should be anticipating a pullback. And you notice most of the day was to the downside. It turned out to be a red candle. So simply even just having a daily perspective as far as what you're looking for trading and saying, I'm looking for simply short trades, can help keep you in line with what to look for so you're not over trading. Then after that move to the downside, why price stopped and moved higher? Well, that's where we'll start to bring in some of those other behind the scene things. Couple of them just off bat is that we dropped into a previous daily 2-candle flip. That's going to be the red candle coming down, green candle closing within the range of the red candle. We've got a drop into a previous 2-candle flip. In analyzing the daily candles, notice how this candle closed. So in dissecting each daily candle, notice that we had a down day, but towards the end of the day, we started to see the buying coming in. Now, the reason why is because of our 2-candle flip to the left. What that leads us to say is that the buyers are starting to continue this move to the upside. Once you learn how to follow the daily candles step by step, that can give you an idea of what to trade and how to trade each and every day. And that's how I prep for these live trading sessions. Come next week, Monday, Tuesday, Wednesday, during the 3-day event, I'll be breaking it down for you, providing each and every step as far as what to look for, so you're the most prepared for getting in on these trade opportunities when they happen and being confident knowing where they're going to happen. So you notice copper is our spotlight trade. For a long trade setup, we have a 2-candle flip down at 4.5480. Stop at 4.5170. Now, the reason being is, all right, well, we're getting a pretty big sell-off right now in copper. But as we're coming down, you want to look for where price is coming down into. This is very, very important in seeing those pullback moves, especially when we are seeing sell-offs like this. You need to look left and see where price is coming into. So as we're selling off, we're coming down into a 2-candle flip on a 4-hour time frame. As we're coming down to, can anyone else tell me what we're coming down into besides a 4-hour 2-candle flip? For those of my students who have been around for a while, what do we call this setup? When we have a red candle coming down and a green candle that breaks above the red candle high. Scott's got it. Nailed it. Thank you, Scott. Wick over wick reversal. Absolutely. And we'll go into more detail on this next week. But looking for those reversals when price breaks above those wick over wicks, those are those key turning points in the markets and also help us indicate trend. As you put the pieces together, it's simply navigating the back and forths of trading with the trend and being able to understand how these candles are portraying the buyers and sellers and where we want to get into our positions. A lot of traders, make trading much more complicated than it needs to be. My goal with you guys is to simplify it so you know exactly what to look for. Again, the origin of this huge 1% move on copper and even more than 1% previously as we got up to 4.74, all started with that wick over wick reversal and a couple other things tying in trend and our 2-candle flip. So keeping that in mind, as copper is pulling back, let's see if we can get into some trade opportunities. Mentioned that the trend is up. We're looking for long trade opportunities. This is the time where price is coming down. We want to look for a pullback into a area where the buyers are in control. That's going to be right in what Scott mentioned, that wick over wick reversal. Let's drop it down to a 1 hour. Take a look where we're at. Now, the thing is, and where I've seen a lot of traders struggle in the past and up till now, is that a lot of us want to try to pick bottoms more often than not. So be careful with zone trading. If you're choosing zones, just make sure that the location of them is in a very specific spot. Otherwise, it's elevated risk taking zones. That's going to be a little bit more trickier. What I would say though, and kind of one of my hacks that I like to do and what we'll do next week is how can we actively participate in a trade without picking a top or a bottom? Now that's going to come in from taking a momentum trade. Who knows the other word for momentum trading? What type of style is that? Instead of zone trades, supply and demand, momentum trading would be taking what type of trade? Not supply and demand, it's taking blank trades. There we go. Thank you, Scott. Breakout trades. All right, so if our objective is to go long, copper's pulling back, we want to get in without picking a bottom, well, we can get in on momentum by taking breakout trades. So you may say, well, the markets are pulling back. How can I take a breakout trade long if we're already moving down? So that's going to come in by incorporating some of these other odds enhancers that you'll see in the step-by-step walkthrough, but it's about finding where those turning points are likely to reverse and likely to happen. One odds enhancer for that, as the market's pulling back, notice on this move down, we've got 2 red candles coming down. We've got this wick over wick. Now these wick over wicks are huge. I learned this kind of later in my trading of just how invaluable they were and how useful. But the wick over wick shows us where there's that imbalance of orders. In other words, when we look to take trades, this is where that battle is happening between the sellers pushing price down and then where the buyers will be struggling to push price up because we're currently in a pullback move. So if you tell yourself, well, we're pulling back, I have a long trade bias because that's our spotlight trade and we're looking for a long trade. Sometimes price doesn't always come down to our 2 candle flip zones for our trade opportunities. How can we kind of maneuver this without guessing and without picking bottoms? So again, having that extra confidence is going to be from the breakout trades. What we're going to be looking for is when price reverses above that wick over wick, that is more likely going to be our reversal back to the upside. So even before going down to a smaller time frame, you can set up a trade on a 1 hour if you see a setup. In this case, I'm going to set up a long entry going long above that wick over wick. Typically, my rule of thumb is going long 1 tick above that wick just to show that the sellers have been eliminated. So let's see, that high point is 4.641. So to enter the trade, I'm going to do buy custom with stop. In setting up the order, I like to do buy stop limit orders. The reason being is that will get me in on the breakout, but it will also ensure that my fill price is at that breakout point or better. So by doing a stop limit, it's triggering, what the stop is doing is it's triggering the breakout, and it's also ensuring that my price is buying at that point or better instead of getting a bad fill. So again, the entry is going to be, what was that number again? Anyone remember? Let's see. 4.641. So buy custom with stop. 4.641. That's going to be our stop limit price, 4.641. And then our sell stop, if you want to keep it simple, you can base it off of your risk parameters. How much are you willing to risk on a trade setup? For me, I like to keep it $100, $150 per trade. You need to have those rules in line, have your trade plan in place, and so you know what your max risk is, so you're not overextending yourself. So let's see, copper. If you want a hack on Thinkorswim, they show you when you come down to the futures tab, it shows you the tick value. So for example, if I wanted to risk about $100, $125, that would be about, if each tick is $12.50, then to stay within $100, $150, I'd like to risk maybe 10 ticks of risk on that setup. So as you can see how copper is moving, it's moving in ticks of 5. So 4.6300, 4.6305. So what we're going to do is from our entry 4.641, 4.6410, I'm going to place my stop at 4.6360. So it's triggering our buy stop order on that breakout, and we're placing our sell stop based on our risk parameters of about $125 worth of risk. Once you've done that, you're in on the trade ahead of time. You don't need to actively monitor it unless you want to, but this allows you to get in without picking a bottom, picking a top, and trying to guess. You're getting in on more of that confirmation. As we wait for copper to set up, which should be happening shortly. I'm just checking one more thing, make sure student was able to get in the room. I think so, though. Okay. So as we wait for copper, and again, it's coming up pretty quickly, I want to jump over to crude oil. Now, did anyone here from our live trading session get in on the long trade by chance? Just seeing who's in the room right now. Anyone get on the long? We're up about 0.56% on crude oil. Come back out to the daily. Talked about this one last week. We set up our order on crude oil. Just want to show you what we're up right now. This was our set and forget trade, kind of similar to the copper setup that we're in now, in which we're looking for that momentum trade to the upside. If not, again, similar setup of how we're analyzing things. But again, next week, you're going to have that step-by-step process, know what to look for, where we're looking for those turning points so we can get in it to them at those key origins of those market turning points. But crude oil up $1,310 as of this point. Markets were pulling back. Can anyone tell me some odds enhancers we saw in crude oil for the long trade setup? Just zooming out. So you can see my chart's pretty blank. So this is my goal for everyone in the room, is to be able to not have anything on their charts and be able to visualize where the markets are going. There we go. Good job, Mark. Came into a prior flip. Yeah, so look left. See if we come over to the left-hand side, we had a previous 2-candle flip. Some odds enhancers that I like to look at is just seeing that it's been holding previously. Now, there's a rule that I've heard in the past where they say if you have a zone, it's been tested several times, it's more likely to break. Now, in some situations, yes. In other situations, no. It actually means it's more likely to work out. So in this case, we have a 2-candle flip, which is our turning point group of candles. You can see price came in, held it once, twice, 3 times, came deeper into our 2-candle flip. 2-candle flip is simply the red candle coming down, green candle closing within the range of the red candle. Price came into that, and then we got our momentum move to the upside. So I think our entry looked a little bit different. I think we got in on a wick over wick reversal at that point. But again, actively monitoring the markets as we prep for the market open. Even today, markets are opening in about 4 minutes. We're looking for these trade setups actively. Looks like we're in on copper as well. Hey, Scott, let's see. Isn't that another flip just to the left? Absolutely. Probably doesn't make much difference. Yeah, so if you see a flip to the left, even, let's see, this upper one too. The more flips you have, the better. It's just showing that there's a lot of buyers at that point. The more you can kind of stack up your 2-candle flips, the better, in showing that this is where the buyers are maintaining control, pushing price up. When price comes back down to those 2-candle flips, we look for price to change direction. Let's see how we're doing. I think we just got in on copper. There we go. How about that? Pretty stress-free trade, right? We're in on the move. We didn't pick a bottom. We're taking that breakout trade. We're up about 62 bucks. And how many people are probably getting a little bit nervous now trying to pick the top as the market's rallying? We got to change our way of thinking. Probably could have gotten in a little bit sooner, coming down to a smaller time frame to get in maybe on this breakout down here. Just looking at that little bit of resistance. This is where we'll kind of hone in on managing risk and how we can get into trades even sooner. And that's simply by adjusting the time frame up or down to see the picture on the price charts. Right now we're in on that momentum move. If we do get stopped out, we'll find a better entry point. This one was kind of a little bit wide just based on the fact that we were using the 1 hour time frame. Coming down to the 2-minute, you'll start to see more detail. You can hone in on your entry point, so your risk is going to be much more limited. But theoretically in this spot, I would be putting my stop down where these bottom wicks are. If we can get another push to the upside, then I'll be able to bring my stop up even above maybe this low wick that's forming right now. I want to see if we can get another push higher. One more push up on a breakout. That would be a pretty good spot to adjust my stop up and lock in on profits on a move to the upside. Now, you can see as we're walking through this, it's very methodical, very step-by-step focused. We don't want to be those traders that are looking around at a million charts, trying to trade everything. We need to know precisely what to look for and the step-by-step process in which to do it. And that can help lead you into getting into some of these trades and being confident knowing why you're getting into those trades. So I do just want to point out for those of you who haven't registered, all of this is going to be talked about in the upcoming 3-day event that I'm doing next week. For everyone who's in the room today, you do get 1 month of these live trading sessions included with the 3-day event. Now, I haven't done this before, but I do want to continue to support you guys in the live trading sessions. What's different about the 3-day event versus the live trading room is that in the 3-day event, I'll be able to give you that behind the scenes of look as far as what to look for, where those turning points are, how we should enter, how do we assess trend, and overall putting all those pieces together to see the bigger picture. That's starting Monday from 8:30 a.m. to 11 a.m. Eastern, going behind the scenes Monday, Tuesday, Wednesday, and then we'll be implementing it for an entire month thereafter. I'm going to post the link in the chat. Make sure that you get registered for that. In the meanwhile, let's keep going. And a little bit of a pullback. And our bias is to the upside. We'll see if we can get a little bit of a correction and then push to the upside. It is our spotlight trade. Again, using that higher time frame analysis is what can help us figure out which sort of trades we want to take on the smaller time frames. That's what we're doing at this point. Hey, Callie, let's see. Copper, are we on the end contract? Let's take a look. Let's see if we can get that pushed to the upside. So if you ever want to be 100% sure, I know sometimes my simulated account isn't always 100%. What I like to do is just go to cmegroup.com. Go to markets. Copper is going to be a metal. And then you don't even have to click on the button. Just see which one is here on the CME group. And you can, hopefully everyone can see that. Let me try to zoom in a bit. There we go. So whatever letter is here on the CME group is going to be the front month contract. So yeah, we're going to be trading the end contract at this point. Awesome. That's what everyone else is on. Jeremy, thank you. Patrick, awesome. Yeah, if you ever need that extra confirmation, just come to CME group. You don't even need to go too much further than that. Just see which contract is showing right there. There we go. There's that next push. You know, as you're learning and testing it in this, there's no problem, no issue with what I always tell students, especially in their learning. Grab the profits while you're up. You know, if $100 is something that you strive to make each day, maybe that is, you know, your goal is I want to make $100 a day. Starting out, as you build your confidence doing that, rinse and repeat $100 each day. Continue to do that, build up your account until you can start staying in trades longer. But it starts with grabbing those quick profits to boost your confidence that you're following the step-by-step processes. Anyone grab some profit on our copper trade by chance? And I was looking to get out about $100, 87.50. But again, just showing you that take those profits while you're up. Looks like we're going to get another push to the upside. I would say more advanced students, you can, you know, look to stay in them a little bit longer. Just make sure you're managing risk closely. Nice job, Patrick. Let's see. So for you and anyone else, to continue to stay in it, I'd come down to the 1 minute. This is where if you kind of like looking at the details, you can come down to the smaller time frames. Once you know what the pictures look like on the larger time frames, it's the same sort of picture on the smaller time frames. You just want to bring your stop up to where the buyers are maintaining control. Typically, it's those pivot points, those wiki areas. So I would bring my stop up to that last 1 minute pivot, 4.6385. If you want to take profits though, you can do that and then wait for another setup. The next setup, so this is where it can start getting fun for those day traders that like more of the kind of scalping techniques, is that as we were managing this, kind of step back. What did we have at 6:31? Right after we got into the trade. On the 1 minute time frame on copper, what did we have? What happened at 6:31 or 9:31 Eastern? What is this picture right here? Not a wick over wick. This one's going to be, we do want to look for that. So if I saw this on a daily chart, man, game over. This is the setup that we're looking for. So again, you can apply it to the 1 minute time frame as well. It's really up to you based on trading style, but we've got a support. We've got a breakdown. We've got a 2 candle flip. That's going to be this one. 2 candle flip tells us, let me remove the price markers. 2 candle flip tells us, look to go long on the next candle. Bam, huge move to the upside. So you got to ask yourself, and this was something I kind of learned later on in my trading, is when I saw these moves and I was right in seeing the 2 candle flip, it was a pullback, break of support. And I said, the next candle was right. Now this was a huge move, but I only made maybe 50 bucks on that move to the upside. Now, if we change, if this didn't say 1 minute, if this said 1 week, or if this said 1 day, imagine this was a daily chart. Can you imagine how much profit you would have made on a daily time frame on this move to the upside, simply based on the 2 candle flip? Smaller time frames, going to be taking smaller profits. Larger time frames against the same picture, but that daily chart may have given you much larger profit potential and a larger running move. Keep that in mind. There you go, Patrick. Made your quota earlier. Take the 75. What did you trade earlier, Patrick? That's the other thing too. If it's not a huge move, take the money while you're up, and then just like this case, look for another setup. You know, we don't want to be one of those traders that tries to hold on to their position and fingers crossed it stays and it works, and they're just guessing at that point. That can be extremely nerve-wracking and stressful to do that. What I tell people is grab the profits while you're up, get out of the trade. If it's going against you, you should probably get out of the trade anyways. You don't want to stay in a trade that's going against you. If you want to get back in, simply look for another setup. In that case, as price is coming down, you would do the same thing. We've got support here. We've got a breakdown. And we don't want to pick a bottom. But maybe I'll go long as price starts to break above a wicky area. Or we could do, as Scott mentioned before, he mentioned the wick over wick reversal. 1 minute time frame, maybe right there for the wick over wick reversal. I'd probably want to take a look at a different time frame. Let's see a 2 minute natural gas. We'll jump to that one too. Okay, so we're pulling back, copper, starting to maybe form a 2 candle flip. Once we do, we can look to take it long on a breakout to the upside. Till then, I'm going to hold off, let the markets pull back. And this is where other traders, kind of less experienced, or if you're a little bit nervous, may start trying to hold on your position or jump in now. You want to let the market show where they're going. That often means waiting for that confirmation on those momentum moves. Curious what you took on natural gas. Let's jump over to that one for a second. daily chart. Did you get the long trade from yesterday? Who knows the odds enhancer here on natural gas? Why did price have a huge rally yesterday? What do we call that? That's how price was basing. Big move to the upside. What caused that move to the upside? Took it short, 2.3. Nice. Short trade. It's a little bit riskier. Let's take a look. It might have a longer running reversal because we do have resistance on the top side. I have to take a look. Anyone know what this area is called in the green box? Yep, exactly, Scott. These wicks on the bottom side are what we call our wiki area. So some people see it as support and resistance. We'll define it a bit more during the 3-day event, but it's showing you evidence of where the buyers or sellers are in control. When you see a tremendous amount of wicks, you want to trade in the direction of those wicks. So price coming down into a wiki area means we want to look for long trades. Price rallying up into an upper wiki area, for example, this one over here, we want to look for short trades. Combining a wiki area plus a 2-candle flip, it's a pretty nice reversal move. Having the confidence of knowing what to look for, especially on the daily time frame. Yeah, those wiki areas are tremendous. So let's see, took it short 2.3 for the quick trade. Yeah, the trend is up. I'm more biased to the long side just because we are having these impulse, correction, impulse, correction, impulse. So we're trending to the upside, which means a pullback is likely going to try to find where the buyers are and then continue to the upside. So if you are taking a quick trade at 2.3, but maybe you want to find your entry to go long to stay in on a longer term trade, well, let's see how we can do that. It's going to mean going down to the smaller time frames because we're getting a pullback. We also do have resistance here. So I'm going to be curious how today ends on natural gas. It could be a 2-candle flip to the downside. What we'll be incorporating next week is some of those odds enhancers as far as how the candle closes is extremely important. We need to see where it closes. We need to see the strength of the candle. All of those odds enhancers will help you determine whether to go long or short. Right now, kind of in between the buyers and sellers. The buyers are down here and we're seeing some selling coming in. We're down over 1% now. Let's see how it looks on a 4-hour. Okay, so the 4 hours is downtrend. Now, why I'm saying that is because we have resistance. We had a breakout. What this is turning into is actually, let me pull you guys, see who knows this. Resistance. We had a breakout. It worked for a little bit and now it's pulling back. What do we call that when we have a breakout that's short-lived and then it starts going against the breakout? Who knows what we call that? Resistance, breakout. There we go. Mark knows it, Scott. Yeah, that's our fake out breakout. So we're pulling back. It got everyone in long. And now they're feeling a little bit of heat as the markets are pulling back. So if we know this is a potential fake out breakout, let me tweak and adjust the time frame a little bit. I just want to take a look at a 12-hour. And Mark, you like the 12-hour. I've been looking at it a bit more since you kind of mentioned it. Resistance, breakout, pullback. That wick over wick reversal's already underway. Let me go down to a 10-hour. So a couple ways to do this. So if we're anticipating a fake out breakout, breakout reversal, then our entry to go short would be any one of the rules that we apply each and every day in the live trading room. But again, having the time to prep you guys and kind of go through those steps will help you see these pictures ahead of time. So got a little bit of support here. Maybe we'll go short on a breakdown. Let's see, I'm going to adjust the time frame. Let's take it down to an 8-hour. Also, any questions so far? Questions, comments, concerns? You'll notice we're not really like jumping around too much. We look at a chart, we analyze it thoroughly, we figure out what trend is, we find out our entry points. And this is, again, how we should be as we trade and prep for the market open each day. All right, if there's no questions, I'll keep going. Looks like we're getting a maybe wick over wick continuation to the downside. I'll come down to a 6-hour. Not a whole lot of information there. Sometimes you'll encounter time frames that don't do a whole lot for you. They're not really helpful. So in that case, just keep changing the time frame till you find one that works for you. Coming down to the 5-hour. You can see our support area. 4-hour. Bounce. Let's try a 3-hour. Go down. I'm gonna the picture I want to show you guys. Let me drop down to a 2-hour. We're getting close to seeing it. Let's see, 1-hour. Hmm. 30-minute. Okay, there we go. All right, so we start off on the daily. Patrick mentioned he was in on his short trade for a quick trade, and we're getting more momentum. Now, how can we identify when we should stay in a trade short term versus when should we stay in it longer term? Now we're still pulling back. Looks like it may have gone against you a little bit. So I like your quick trade there. But when should we anticipate more momentum to the downside? This is, again, what we'll do and is part of the step-by-step guide from the 3-day event that you guys will get on Monday. And seeing this move down, coming down in time frame, all the pictures are going to be the same as far as what we're looking for. As I came down to the 30-minute, who can tell me what do we have at the origin of this move to the downside? What do we see in that pink circle? There we go. 2-candle flip. Yeah, this one's going to be above resistance and support. For these ones, I kind of like to see them above support a little bit. We've got support, and that shows that's that last bounce before the breakdown. What do we call that last bounce before the breakdown in trading? If you were in the Master Trading Strategies 3-day event, you should know that, or if you're in a live trading session, what do we call that last bounce before we break down? Yeah, good job, Mark. Patrick. Yep, there you go, Scott. That is our Patrick nailed it. And Mark too, controlling breakout pivot. So that's controlling this move to the downside. So when you see that, when you're taking your short trades and you see a controlling breakout pivot or one that's being formed, that can help you say, I'm going to look to stay in this trade maybe a little bit longer term. So now as we're coming down, we could take a short trade at 2.312, stop at 2.329. We got super close. Sometimes students will go from wick to wick, I've noticed. Sometimes that can get you in on a trade. You're just going to be increasing your risk a little bit. But if we do that from wick to wick, you'll notice it would have triggered. If you miss a trade, again, just keep kind of walking through these steps in this process. We're coming down. So now as we're getting ready for the next breakdown, we hit a controlling breakout pivot. We'll be looking for a next breakout trade below support. So that would mean our entry is going to be below. I'm going to use this wick over here just because it's a little bit lower. Breakout trade below 2.257. And then again, if you want to manage your risk based on your trade plan, your risk parameters, then for natural gas, $10 tick value. If you want to risk just $100 on a trade, you might risk just 10 ticks. So in this case, you could set this up. Breakout trade below 2.256. 2.256. Sell stop. And then our buy stop. 2.266. What we're doing is we're saying, I want to look to go short. I've identified a controlling breakout pivot. We're pulling back. Mark and Scott mentioned previously, we had that potential fake out breakout. So that's why we're looking for our short trade. Putting it all together, but I only want to risk $100. We've got our entry, we've got our stop. All the pieces have been put together. And we're not deviating from anything. We're not making up rules. We're not making up pictures that aren't there. We're simply adjusting the time frame and seeing what fits based on what we're seeing right now. Hey, Patrick, yeah, let's see. So I could have waited for the move and taken the pullback. Absolutely. Probably more conservative approach and look to go longer. Yeah, so what I would have said, because what time did you enter on your short trade? 2.3. So did you take the breakout on this break of support, the breakout? Okay. Yeah, so what you could do, we kind of step back. And so Patrick was already anticipating this ahead of time, which is excellent. And what I want everyone else to kind of get to that point is that he's seeing this all pan out as we're getting that pullback, found his support, looking for the breakdown, and then got in around, as he mentioned, around 2.3 for the breakout. What that means is when you're taking the breakout trade, just be careful because then you need to use your controlling breakout pivot to manage your risk. So in this case, our risk from, if you got in at 2.3 to 2.329, be about $290 worth of risk. If that's too much risk on a breakout trade, what you could do is wait for the pullback and take your controlling breakout pivot as a zone entry or confirmation entry. That would have meant instead of getting in at 2.303, if you went wick to wick, you could have gotten in at 2.307, saved a couple ticks, or using the body of the red candle, then your risk would have only been 12, 22, 17 ticks, $170. But in that case, we may have missed the move. This is where to be, again, if you want to have a more conservative approach, we're on the 30-minute time frame, so that's limiting what we're seeing. I would just say go down to a smaller time frame. You can drop it down to a 2-minute. And as price gets close to your controlling breakout pivot, just kind of isolate that area of where it is. And as price starts to approach into it, then look for your confirmation with a 2-candle flip as price leaves that area. So we could have taken it here, 2.299, stop at 2.308. That's only $90 worth of risk. And then you're getting the confirmation of the turn with the 2-candle flip. So you're on the right track with the breakout trade. You got your quick trade. Like you're saying, and I like that you're kind of bringing this up. We'll talk about this more on Monday, Tuesday, Wednesday for the 3-day event, is if it is outside of risk parameters, or if we are taking a breakout trade and we're hesitant on the risk on a breakout trade, we need to find other ways to kind of manage that and work around that. So that's either going to be dissecting the breakout point or finding a re-entry on for a zone entry for the controlling breakout pivot. All right, let's get off the 2-minute. Great question. Great trade, Patrick. I love that. Now we're just waiting for the next setup. Your trade setup, better one if we got in a little bit sooner, but we can see it's already underway. And now we're just staying with this trend to the downside. Now may push back higher into our controlling breakout pivot. That would be nice. If it goes deeper into that 2-candle flip, we may look for an entry at 2.312. Even though I have the order set up for the breakout short, if price comes back to your zone, you can look to take the zone entry. Absolutely. Any questions on that? Not sure if it's going to break down. We'll see. It's just kind of after that move now, it's just been going down, up, down, maybe back up. We'll see. Where are we at on copper? Well, there was our re-entry. We mapped that one out. Just got distracted and went to a different chart. See that re-entry point, how that worked out? Breakdown, got everyone short. We were looking for that reversal for the momentum move. Got in. Now we're pulling back, and we don't want to pick bottoms. That's what stops out a lot of traders. So as we're pulling back again, we want to wait for the confirmation. If price is going to break out to the upside, potentially though. Could be a breakdown. Kind of hard to tell. It's trying to rally, but we're not getting a huge move higher. It's rallying, it's breaking out a little bit and then pulling back. Let's see. Let's go back to the daily chart. Yes, remember how bearish the daily candle looked before? It's starting, that green body is starting to push higher. So the buyers are trying to push price back up. That's a good sign for our long trades. I just feel like we're kind of struggling on this move higher. Let's see, would that be a return to a controlling breakout pivot on the 2-minute? Let's see. So good question, Scott. Scott's question is, would this be returning to a controlling breakout pivot on a 2-minute? This one, kinda. So when we're using the controlling breakout pivot, those ones we want to look for more trend momentum where we see a lot of touches of resistance, a breakout, and we're already in a trending market. It becomes more elevated risk using that as a controlling breakout pivot to the upside. We're in a downtrend when we're in a downtrend. Typically, I would use the controlling breakout pivot on the top side. For example, it's a great question. What I would use as a controlling breakout pivot would be this one up here due to the trend. So as the market was coming back, I would have used this one for the short. Let's see, I'm gonna clear it off. Might be one closer. There as well. I would say here's a controlling breakout pivot. Right in here, there's two right there. So I'd say these are more of the controlling breakout pivots because the trend is down. If we're using this one as a controlling breakout pivot, you kind of want to look back and find where your previous one is that is in the direction of the trend at that point. Because this one is often where we may get a bounce and then price could continue to go with the trend. And then let's take that a step further. So if these are controlling breakout pivots down, and say we thought maybe this was a controlling breakout pivot short, as price is bouncing here, theoretically we could be forming a new controlling breakout pivot to go short in the context of trend. So you always look at trend, kind of step back a little bit to see where you're at. This one we're pulling back a decent amount. Looks like a head and shoulders right there. So this could be a breakdown. It's looking like we're getting maybe a controlling breakout pivot before the breakdown. So I'm going to take this short. Below that low is below 4.6370. 4.6370. Buy stop. Let's do 4.6420. Should keep us around $112 worth of risk, more or less. So we'll be looking to take that breakdown below support, because now it's looking like this may have been a little controlling breakout pivot before our next breakdown, which then is tying into the trend. Great question, Scott. Today's session has flown by. Are there any questions on what we've covered today? I know these live trading room sessions are pretty fast paced. The goal for next week's 3-day event, as it's approaching quickly, is to go behind the scenes with you guys and prep you to get into these trades ahead of time, so you're seeing the process and knowing exactly what to look for. I'll be providing you with that step-by-step walkthrough as far as here's when you're getting ready for the trading day, here's what you should be looking for, here's where your entry should be, and really understanding why and where you should be looking. I created this event and made it during the Monday, Tuesday, Wednesday morning sessions so that I could go behind the scenes with you guys, which I haven't done before. It's going to be the first time actually starting earlier in the day at 8:30 a.m. Eastern time to prep you and show you what I look for as I start these live trading sessions. It's a lot of behind the scenes work that I do that I don't get to share with you guys just because the live trading room is more fast paced. But if you're still kind of hesitant or lacking confidence with your trade entries and knowing where and when to get in and out of trades, come to the 3-day event. Again, it starts on Monday, May 13th, 14th, 15th from 8:30 to 11. And better than that, even if you're in the live trading room sessions, you still get the 1-month complimentary of live trading room follow-up, which is $125 value as is. So you'll be in the 3 days prepping with me. We'll be setting up trades real time in the live markets, seeing exactly where and when and why we're getting into trades, implementing them. So in the 1-month follow-up, we'll just be practicing, implementing, answering your questions, going over many examples, and going over many more charts during the 1-month follow-up. It's actually more than a month. I believe it's going to be 5 weeks of follow-up. So if you're interested, I'm going to post the link in the chat one more time for you guys. So excited about this event. And if you're one of those people who's still on the fence with their entries, maybe you need help pulling the trigger, so to speak, as far as knowing when to buy, when to sell, or even just knowing which side of the trade to be on. You know, should I be taking long trades or should I be taking short? This 3-day event is going to help clarify those because you'll be with me and we'll all be together implementing these trades in the live markets. So looking forward to having you all there. If you have any questions on the upcoming 3-day event, feel free to send me an email at tradingcoach@kaittrades.com. All the information is here as well as on my website, kaittrades.com. Again, the goal is to get you in on some of these longer running trade opportunities. Crude oil has been amazing. Today we took our copper trade. We're waiting on, or we took the copper long trade. We're waiting on the breakdown. Looks like it dipped below a little bit. It didn't trigger me, so I'm still waiting for that entry. We'll see if we can get into that one on this down move. And then what else have we done? Natural gas, kind of just in between stages at this point, waiting for pullback to our controlling breakout pivot or the breakdown. But overall, we're putting all the pieces together step by step to just help you guys know exactly what to look for when you're trading in the live markets. So you can do this on your own, but till then, come with me 30 minutes before the live trading session, 8:30 a.m. Eastern time, Monday, Tuesday, Wednesday, 3 days a week. You get all the recordings, all the content, plus 5 weeks of follow-up in the live trading room. So tremendous value. I'm looking forward to having everyone there. If you've already registered, you'll be getting these Zoom links for next week's sessions in about an hour. Actually 1 to 2 hours for me to send out those Zoom links. And then if you register today, just make sure that you let me know if you refer a friend as well. Not sure I forgot that. But also if you refer a friend who signs up, you get it for $2.99 each. And then you'll get the $50 rebate after purchasing. So great value there. Again, make sure you get signed up. I'm looking forward to having everyone there. If you have any questions, feel free to reach out to me. Other than that, thank you all for being here. Thank you, Jeremy. So good having you here. Have a great weekend, everyone. Stay safe out there. And I'll see you guys all on Monday, bright and early. Remember, the class starts at 8:30 a.m. Eastern time, not 9 a.m. Eastern. So be ready at 8:30 a.m. Eastern. Thank you all for being here, and I'll see you guys all next week. Have a great weekend. Bye-bye.